Hello friends and welcome to Cafe Mutual YouTube channel. Friends, we all know that India is one of the fastest growing economy. In fact, it will soon become the third largest economy in terms of GDP. So, one sector that has benefited from India's growth story is auto. In fact, auto industry has delivered over 45% return in just 1 year. So clearly, auto is a cyclical sector and growth looks very promising. So to talk more about auto sector in details, today we have invited Arun Sundaresan, Head-ETF Nippon India Mutual Fund. Arun has over 20 years of experience in mutual fund industry. So without wasting time, let's welcome him. Welcome to the show, Arun.
Thank you, Nishant. Thanks for having me on the show.
So Arun, my first question is that over the last 1 year, as you know, auto index has delivered over 45% returns. So why do you think that there is still a lot of opportunities available in this sector?
I'll come to the returns part a little later, but if you fundamentally look at it, the automobile sector is a large sector per se in India. We are the third largest market in the world. But within that, also some of the sub-segments, like for example, two-wheeler, three-wheeler, we are largest in the world. But having said that, if you look at some of the numbers, for example, Indians own 26 cars per thousand. That's the kind of number. And if you look at the equivalent number for the rest of the countries, forget about US. US, that number would be in excess of 550 cars per thousand. So that could be, extreme. But even if you look at some of the other equivalent or similar comparable countries, developing countries, this number would be probably 8, 10 times more. So
Okay.
clearly points out to the current underpenetration in the market, and the same goes for even two-wheelers. So we have something like 160 two-wheelers per thousand. So even for some of the other countries like Vietnam and Mexico and few other countries, this number is 3 times, 4 times more. So very, very clearly from that point of view, there is a large underpenetration and therefore ample growth opportunities going forward. So that forms the basis, given the fact that India is a high growth economy, and as we go along, the income levels of the households are likely to go up, disposable income levels are likely to go up, their aspiration, all of that augurs fundamentally very well for the automobile sector. I think we can consider this sector as within India, reasonably a high growth sector offering long term growth potential.
So, Arun, so as you know that every metropolitan city has been developing a good public transport system, right? Mumbai is coming up with metro. Bangalore is also working on a metro. So, what do you think? Will it impact the two-wheeler or four-wheeler segment?
So overall, see, there are multiple growth drivers as far as automobile sector is concerned. The first and foremost, we did touch upon it, the demand aspect. The current level of underpenetration itself potentially gives a lot of growth opportunity going forward. We did talk about India being a fast-growing economy, right? So within that, the disposable income levels, as and when they go up, the aspirations level will go up, which means that someone who does not have, let's say, a two-wheeler or a four-wheeler will aspire to own one. Forget about whether metro is happening or other public transportation is improving, but the mere fact that they would want to own, let's say, two-wheelers, four-wheelers to start with at some point in time, and then once they have it, at some point in time, they may want to upgrade. Someone with an entry-level vehicle would want to upgrade. Someone having one vehicle would want to go for the second one, and so on and so forth, right? So this is likely to be very, very pronounced, and as we go along, we'll keep seeing that. And within that, there will also be a phenomena of premiumization, where you're already seeing that, even entry-level cars, there is a lot of upgrades, whether it is in terms of interiors, safety features. Therefore, the price points also tend to go up over a period of time. So both in terms of volume as well as because of this premiumization, the price points, both of them tend to go up over a period of time. So this is something very fundamental that augurs very well for this particular sector. This is point number one. Second is there is a lot of emphasis, from the government. There are a lot of policy support also for this sector. So automobile sector is one of the sectors where the production link incentive, the PLI scheme, is available. So PLI scheme was for a period of 5 years, where automobile manufacturers, if they meet certain targets, they'll be incentivized. This already is attracting a lot of investment. In fact, since the announcement of PLI, nearly $8 billion of investments have come in. This is close to about 70,000 crore. So that also augurs well. This is again a segment where FDI flows tend to be reasonably strong. That in the last 4 years, this sector has attracted close to about $26 billion of FDI. Having mentioned about PLI, government along with the automobile sector also came out with automobile mission plan AMP. For 10 years, originally was between 2006 to 16. Then there was another 10-year plan for 2016 to 2027. Very soon, we are likely to come out with a new. They're likely to come out with a new AMP. So this plan actually lays out ideally where automobile sector should be headed and what are the various things that need to be done and so on and so forth. So very clearly, government wants automobile sector to be a large sector, and therefore, the AMP itself envisages that automobile sector from the current level. So today it contributes something like 7.1% of the GDP. They envisage that over a period of time, the contribution of automobile sector to the GDP will be far higher. So essentially, all of this makes it a high growth sector. So within the Indian economy, when it grows at a nominal GDP, which is higher than the rest of the world, the automobile sector you can expect to grow faster. And accordingly, a lot of companies are committing to making investments, building capacity, expanding their current capacities and all that. So we have multiple growth drivers, fundamental and policy and other support that augurs very well as far as automobile sector is concerned.
Okay. So Arun, Nippon India is launching Nippon India Nifty Auto Index Fund. So what's the rationale for this?
The rationale is this. So it's a reasonably large sector, right? As I said, it accounts for a little over 7% of the GDP already. It employs nearly about 19 million people. It also benefits a lot of related sectors like steel and multiple other sectors as well. So within automobile, there are multiple subsegments. You have passenger vehicle, you have two-wheeler, three-wheeler, you have the tire companies, you have auto components. So all of them, are likely to benefit from all the factors that we mentioned about. There is a lot of emphasis of late on the EV ecosystem as well. So over the last 3-4 years, the contribution of EV in terms of the product mix, in terms of the type of vehicles, that number has been going up. And over the next 5 years, 10 years, it's likely to be far more significant as well. So the current players, which are all part of the index, they also have a large EV play already, and they are likely to benefit from the EV play that is also likely to become very large. So we do think that the auto story is structural, long term, and fairly good in that sense. Therefore, it provides for a good investment opportunity, which is the reason why we were coming out with this new fund.
Okay. So Arun, but how comfortable are you with the valuation of auto companies in India currently?
So the valuation of auto, the index is nearly similar to that of Nifty, so slightly more here or there. So to that extent, it's not very different when compared to Nifty from a valuation perspective. In fact, auto's own valuation, when you look at it as to how it was 10 years back to now, the valuations are probably 30-35% lower when you make a 10-year back comparison. So from a valuation perspective, it's not that concerning in that sense that it's almost similar to that of Nifty. And given the long-term growth potential, I think combined with the valuations which look reasonable, that could make for a good story.
Okay. So Arun, currently there are only 15 stocks in Nippon in Nifty Auto Index. So why do you think that the fund is concentrated? Do you think that it is concentrated?
So these 15 stocks, totally in the Nifty 500, there are 37 auto companies, which includes manufacturing companies, the auto component companies, and all of that. These 15 companies account for roughly 80% of the total market cap.
Okay.
So to that extent, it captures entire automobile. Within that, it is diversified. So these 15 companies have diversification in the sense that some companies are passenger vehicle manufacturing companies, some companies are two, three-wheeler manufacturing companies, you have auto component companies, commercial vehicle, tire companies, and all that. So within the automobile space, it's diversified. And I did mention to you that auto contributes a little over 7% of the GDP. It also has reasonably good representation currently in the Nifty and other parts of the market. For example, in Nifty, autos representation again is close to about 7 to 8%. But if you, as an investor, as a partner, if you think that given the structural growth possibilities in auto, if you want to increase your exposure to auto, right, you can do that by investing into this index in this particular fund, and thereby your exposure to auto instead of 7.5 could go to 10% or 11%. So basically, you can go overweight on auto with this belief that this is a high growth sector and potentially it can give you higher returns over a period of time, and thereby, by taking this exposure, you can increase your overall exposure to automobile sector. So that's where this will fit in.
Okay. So Arun, auto sector is cyclical in nature. Any risk to the market may have direct implication to this sector. So why do you think that investors should look at this sector, considering the cyclical nature of the auto industry?
I would actually consider auto far more structural than cyclical. It has the long-term structural growth, underpinning the opportunities. Having said that, any sector, it could be a defensive sector like even pharma or IT, auto, or any sector, right? It could undergo. It's not about cyclicality. If there is anything specific that happens to that particular sector, it might go through a phase of poor performance, right? For example, in pharma, for example, if there is something to do with pricing, government pricing policy, FDA, something happens in the US, etc. Even though it is generally considered to be a defensive sector, it might undergo certain challenging times. Similarly, auto, while the long-term structural story could be intact and the growth opportunities are there can be times. For instance, in 2018 and 2019, the sector faced a very challenging time. So what had happened at that point in time was there was economic slowdown. Obviously, auto is a discretionary spend kind of a story, right? Where when your economic growth is good, you feel confident, stock markets are doing well. That is when you think of buying a vehicle. Otherwise, you may tend to postpone that. So during difficult economic times, when the confidence levels are low, etc., and when it gets combined with at that point in time BS6 norms were getting introduced, so buyers wanted to kind of wait and see how it comes through. They postpone their decision. You'll have to pay for insurance upfront for 3 years insurance, which actually made the prices almost 10-12% expensive. So when all of these things came together, the sales faltered, and even the stock market return from in the auto sector took a beating for almost 2 years. Then COVID, there was a downturn. So 2-3 years, the return not good. But I wouldn't call this is more exceptional. But having said that, this also has a higher linkage to economy because it's not a it's a discretionary spend related theme. To that extent, it has that bit of linkage. But otherwise, if you leave that bit and look at slightly from a medium long term perspective, given the underpenetration, given the higher disposable income as we go along, the policy support, India being fairly large and aspiring to be fairly large in the manufacturing sector, all of that fundamentally holds good. So I would broadly tend to consider automobile as a structural long-term growth story with the possibility of something going wrong in the near term for various reasons, like what we mentioned. So as long as investors are aware of that, I think the growth potential opportunities are there.
Okay. Arun, one last question. You have an auto ETF currently. So, what are the benefits of investing in a sector through index route?
So in the ETF route, you need to have DMAT.
Hmm.
The advantage in the ETF route is that you can invest intraday as well, buy and sell on a given day.
Hmm.
But the other thing is, if the ETF is not very liquid, it's not very actively traded, it might trade at spread. You might end up paying some extra cost by way of spread. So that's something that you may want to keep in mind. But ETF gives the advantage of transacting through the day. That's the biggest advantage. On the other hand, index, it allows you to do pretty much the same thing. You're taking exposure to the particular index and thereby playing that story. You're not necessarily keen on buying it intraday. You're not looking at that 1-2% here or there. You're anyway investing for the longer term. The index format works as well. So you get end of day NAV, but ultimately you're taking exposure to the particular sector, the particular index in this particular format. You don't need a DMAT. It works just like mutual fund. You can make SIPs. It works like any other features are there, like any other mutual fund. And to that extent, there are similarities as well. So that's a slight difference and similarity between the two formats.
So, all right, we have come to an end to this interesting session. Thank you so much, Arun, for your time.
Thank you very much.
And finally, I thank each one of you. Have a lovely day, guys. Bye.